Another company we're watching, Ford, it released its third quarter results on Thursday after the bell, missing expectations. Now, this comes just after the UAW and the automaker reached a tentative agreement that will be voted on by union members this coming Sunday. We want to bring in Yahoo Finance's Pras Subramanian, who has been following all of this closely. Pras, take us through the latest.
Hey, Diane. Yeah, so a highly anticipated report last night following the big news of that UAW tentative deal. And then they reported mixed results shortly after that. But a few things stood out to me with the report and also the ensuing conference call. So the first thing was Ford said that it was on pace to hit its improved outlook before the strike. But as you know, it pulled guidance last night, similar to GM, due to uncertainty here. Ford said it lost $100 million in Q3 and $1.2 billion in Q4 due to the strike. But it said that its costs are still unknown as it restarts production. So I was a little surprised to hear we didn't get an updated figure yet. Well, they said they will issue one shortly. Number two, Ford is pushing back its EV investments, saying last night it's going to push out around $12 billion in those EV investments until capacity is needed. It means they're going to pause some plants that were scheduled to be built in the next couple of years. Ford said in a statement that many North American customers interested in buying EVs are unwilling to pay premiums for them over gas or hybrid cars, thus sort of compressing profitability and prices. So it's a challenging environment over price with EVs. And now they're saying that they still want to keep investing in EVs, but they want to sort of focus on their next gen cars because their current cars aren't necessarily competitive on cost and features, basically saying that Ford is not competitive right now compared to Tesla. And finally, it's unclear in what they said with the tentative deal that if battery plants are part of the UAW agreement. Ford CFO John Lawler on a media call declined to say if unionization at battery plants was part of the deal. Now, Ford, of course, isn't at liberty to talk about these things because of the fact that they still need to be discussed. The UAW is still discussing these things with their membership before they can vote on it, like you mentioned. But this is a big reason why the UAW didn't strike additional GM plants a few weeks ago, because it said that GM agreed to include battery plants as part of the master agreement, as they call it. So it's unclear if Ford has this sort of provision in the UAW contract that it agreed to, but I can't imagine it doesn't after the UAW made such a big deal about those battery plants included into the master agreement.
Pras, I'm curious we've gotten a slew of news within your sector this week when it comes to UAW strike, what we heard earlier this week from GM, even yesterday with Mercedes-Benz, obviously talking a lot about the EV pressure there. And then also what we heard last night from Ford. I guess, how does that then change the landscape when we talk about whether or not some of these more traditional automakers are able to compete with Tesla at this point, given the fact, and really on the heels of the comments from Jim Farley last night, talking about the fact that cost is obviously the most important thing right now, and they don't have, I guess, the competitive advantage that Tesla does at this point?
I think what's happening here is these traditional legacy automakers, as we call them, assumed that EV demand would be pretty strong even at this point of the cycle of where we are economically, and that they could charge higher prices to sort of defray some of those investments that they need to make now as they try to catch up to Tesla. And what they're discovering is that the demand is just not there because the price is so high. I think, taking a step back, we are seeing that EV sales in this country are past an inflection point. They have been rising quarter after quarter after quarter. They're just not supercharged just quite yet. And I think a big problem of that is, of course, pricing, but also we mentioned the charging infrastructure, the lack of that, those chargers in the country is a problem for people. So they're kind of concerned about, well, I should invest in an EV when I don't know if I can charge on the road. So I think it's like a dual sort of problem that the legacy OEMs are facing, whereas Tesla, of course, they're right now enjoying those benefits of scale. They can make cars cheaply, EVs cheaply, they can sell them. The question now is how willing are they going to go to sort of cutting prices to give this, consider what they want. We know that people are paying a sort of higher price for Tesla shares because they think that the margins will remain high. That remains to be seen. But I think there's definitely an inflection point here. We're not changing our course in terms of where the country's going from an EV point of view. The question is, how long is it going to take to get there? And now it seems that it's going to take a much longer sort of time frame before the country is majority EV.
And Jim Farley saying great product is not enough in the EV business anymore. We have to be totally competitive on cost. So really sums up just where the auto industry is in this transition. Pras Subramanian, great stuff. Thanks.